Right, let's go into 4. So 4 is now about depreciation expense. So in accounting, you have calculated your depreciation according to your what? According to your section. So not section. IS what? Depreciation according to which section? Accountant. Yeah?
16.
16.
16.
So Nyabon, I'm provoking your brains. You'll be next very soon you talk about section. Right. So that is what we have there. So that's the depreciation according to accounting. But SARS has its own rules on the same assets that you calculated what? Depreciation. So that's what we're going to calculate now. Okay, so this is what the accountant got for accounting purposes. Now we are doing this tax way. Let's find out on the assets that this company has. Then we do it the tax way. Right, there's Sevenza building, acquisition 1 June 2014, sorry. Purchase price that not 4.1. Sevenza building was acquired on 1 June 2014 at the total cost of 1,520,000 to house Crystal manufacturing operations. During the 2024 financial year, a vigorous cost benefit analysis was performed to evaluate the financial viability of modernizing, expanding, and maintaining Sevenza building to meet the key rocketing demand for glass products. The results of the cost-benefit effective influenced the decision to sell the Sevenza building rather obtain the what? Required manufacturing space through what? A lease agreement. Right, accountants, leases, what standard is that?
IFRS 16.
What?
What is the standard that governs leases in accounting?
Isn't it IFRS 16?
Thank you.
Freeze.
Correct. Right, correct. Something. All right. Okay, so that is the standard that governs. So now there is a lease according to tax. Right. So this company is like, we cannot continue housing and using this building. It's not financially feasible for us. So instead of owning a building, let's lease. So what you first do, you deal with the what? With the cost of the building and the sale of the. Then we'll go right. So first things first, identify the building. What is this building used for?
Manufacturing.
So if it's a manufacturing processes, right? So USAS, whenever a company has a building, so whichever company you're working for, as long as they have a building, right? If you go to their tax returns, right, or whoever does your taxes, you see it's section 13. That's where they talk about all buildings owned by companies, whether it's an office building, manufacturing building, residential buildings, everything is under section 13. So manufacturing building is section 13.1, right? And SARS says, okay, on the cost that you incurred, you can claim it every year at the rate of what? Who knows the rate?
5%.
5%.
5.
5%. Doesn't matter whether it was bought one day before the end of the year, you claim the full 5%. Okay, you claim the full 5%. So now what will affect many students is the timeline. You bought this on 1 June 2014, and it was disposed when? 30 June 2000 what? For that price. Right, so we deal with our timelines. So we've got our year end is what? 31 March
31 March.
2024. The previous year, 31 March 2023, right? When did we sell it?
July.
Somewhere here. So you see, July is within the current year. So that means if we bought it on, what was the date?
1st June 2014.
1st June
Yes.
2014. So what year end was that?
2015. 2015.
You see now. So that means here you claimed how many percent?
5.
Right. And then in 2016?
Another 5.
So you went on until what? Until the beginning of the previous year. So how many times did you claim? So we calculate, you can say 15, 16, 17, 18, 19, 20, 21, 20, 9 months before the current year. I'm talking about before the current year. Do we agree?
Yes.
So that means here, Yes. So now let me try and answer one deal. So the reason one deal why we use this column, you need to indicate to SARS the cost of, because SARS wants to see from what are you claiming the allowance from which cost. So you put it there. It doesn't work you don't put it on the final column. No. Remember, you're indicating to SARS that I am claiming on this cost. Are we together there?
Yes, sir.
Right. So here we come and say this times how many? Times 9 times 9 years. What is the allowance over 9 years? Calculate. Then someone calculate for the 1 year. This is for the current year.
It's going to be 57,000 for 9 years.
How much?
684.
6,000.
684,000.
So you put brackets. So now does it make sense why we are putting this on the first column? Because you are indicating that this is the cost that I incurred, SARS, or 2014. And so far, for the previous 9 years, I've claimed this amount from that cost. And in the current year, I'm also going to claim. How much is it for the current year?
76,000.
So the current year will also go to the final column because you need to claim for each year that you are owning the building. So in brackets as well. Don't forget to do that. All right. So now in total, we are saying since this thing is sold, all right? So there are steps. Whenever something is sold, you need to calculate its what? Its tax value, which is like your carrying amount. It's like your carrying amount. So the cost minus all the claims that you've done until the date of sale. How much do we get? Subtract first.
836,000. Including the current year. Oh, wait.
Yes, including the current year.
Okay, wait. 760.
760.
Yes, 760.
Oh, sorry. Did you say this minus that minus that?
Yeah.
Yes. Yes.
Okay, so this is the carrying amount. In other words, this is the cost price that we have not claimed. So far from this 1520, we have claimed this and that. So this is the remaining amount that we have not. Does it make sense?
Yes.
So yeah, so this does not go to that column. No, it's just the carrying amount. The only thing that goes in here, always remember, is the allowance for the current year, 2024. That's the one that will go here. So the reason why we need this column is we need to show how much the cost was, how much we've claimed from that cost so far, how much have we deducted over the previous years. This is how much we've deducted and the current year as well. So how much is left that we have not yet deducted? It's 760. Then you come to this second step. So this only happens when an asset is sold. You then come and say selling price limited to the cost price. So how much did you sell this for?
1.2.
1.2.
So 1.2 includes VAT. How much without VAT? Remember, here we don't VAT. So I said 100 over 115, right? It's faster. How much do we get?
1,043,000.
1,000,000?
And 43,478.
Right, so we are saying the selling price limited to the cost price. So when you get to this stage, it's always the lesser of the two, okay? The lesser of the two. How much was your cost price?
1.5.
So which one is lesser between
the selling price?
So you come and use the selling price. Okay.
But Jeff, didn't they say like all amounts exclude VAT?
Unless otherwise stated.
Oh, okay.
Then they say to you, oh, sorry, this one excludes VAT. Sorry. Oh, no, sorry, I'm using the wrong one. Sorry. I'm thinking of the other one. There's another 1.2. Sorry. Take it as it is. Thank you. That one, they never said anything. That's why. There's the other one on the list. All right. So we take it as it is. Okay. So don't remove here. All right. Normally, they put a bracket and say including VAT. So this one, that one, they was quiet. That means there was no VAT. All right. So which one is lesser? Still what? The selling
Still the
price.
same.
Yes.
Then you take this amount as it is. Don't ask where it came from there, from up there, right? So this minus that.
For 40,000.
So recoupment is like income. You add it back. Recoupment, you add back. All right? Recoupment, you add back. If it was scrapping allowance, you subtract. Scrapping allowance is in brackets. What would have happened? The selling price limited to cost price will be less than the tax value. So in other words, the tax value will be more than the figure. So you'll get your scrapping allowance. So scrapping allowance, I repeat, scrapping allowance, recoupment, right? Recoupment, you are paying back to SARS, okay? You are paying back, you understand? Because SARS is saying, yes, you bought something, I was giving you allowances. Then suddenly you are selling something. So can you recoup? Pay me back. Pay me back. So you are paying me back the difference between what you couldn't claim and the lesser between the selling price and the cost price. The difference between that, pay us back, because we're allowing you to deduct. So you know that when you're deducting every year, you are paying less tax. So SARS is now angry. In other words, if I can make you visualize that, SARS is angry, saying, recoup. Are we together there?
Yes.
So you find, yes, you find a lot of this in capital gains. When you're not doing the H schedule, right? Capital gains, that's where you get a lot of the selling price limited to cost, tax value, recoupment. That's the capital gains. Capital gains is triggered when you sell something, all right, normally, right? Or when something is damaged or it is deemed as a disposal, blah, blah, blah. All right, but we're not there. So we are done with the,
But Jeff,
yes.
I was gonna ask that. So in this case, if the selling price was above 1.5 million, then the CGT is applicable,
This CGT is always applicable.
provided we sell above the cost.
Yes, above, yes. If you sell above the cost, CGT is triggered. If you don't sell above the cost, there's no capital gains, just in case you're hearing us throwing abbreviations, capital gains tax. Right, let's go. We'll get to capital gains tax, right, on another day. If you want, I can send you recordings if you think you want to go forward. But especially those that are writing soon, I can send you then we'll meet and then we discuss. All right. And then list improvements. Right. Now we are going into a different world. Okay. So this world is governed by section, right? It's section 11, small g. Section 11, small g. All right. So let's go and read about that. So remember, this company thought, let's just list, guys. Let's list. So in other words, these guys are a lessee. They're now a lessee. We did lessees if you're doing a FAC. Guys, I'm joining these things because these things are related. All right. They are related. Right. So now when it comes to a list, all right, most of the times they are going to ask you on what they call a list. So what would have happened is that you are listing a place, or you're listing, right, an area. And then the owner of that area says, can you effect some improvement on that place? You, the lessee, can you effect some improvement, right? There is land. Can you build on that land? It's not yours, but build on it. So that means now SARS recognize that, okay, you are making improvements in someone's property. So you can what? You can claim those improvements. Yeah, that is the story, basically. So remember, this is in the books of the lessee. If you are a lessor, that's a different story. Lessor, different story. Right. So they are saying a lease commencement date, 1 August 2023, which is within our tax year assessment. Lease term, 15 years with an option to extend the agreement for another what? 5 years. Rental, 15,000 payable monthly in arrears with a 10% escalation after every 12-month period. So this will not affect us. So don't worry about that. If you're looking at the timeline, remember, we are renting from the 1st of August 2023 and our year ends on 31 March 2024. So it's not just 12 months. So that 10% won't affect us. It's going to affect us if we were doing the what? 2025 tax returns. Then we need to escalate our rates. And anyway, it's normal, guys. When you're renting from a place, every year, these guys say 10% on top. So we know that. Okay. So here, rent. So this is a free mark for whoever will be writing this. It's a free mark. Just identify when you enter the what? The list is 15,000 per month. You start counting August, February, March, 8 months. So you say 15 times 8. Free mark. Right. Free mark. No excuses. Right. So this one, no excuses. How much do we get there?
120. 120,000.
I'm going to get 120. It's in brackets. You are paying. You're not receiving. All right. You are paying. So brackets. Once you forget your brackets, you are implying that that's income. So you are increasing your own tax. So know the significance of brackets. Right. List premiums. Now this is now section 11. Right, now this is governed by section 11F. Right, you pay premiums when you are, especially with these guys, companies, they say pay premium. Right, so you are paying a premium. So the premium is 100,000. So SARS says claim it over, deduct it over the lease term. What did I say? Deduct it over the lease term. Right, so when it comes to the lease term, be careful, because when it comes to the lease term, right, the owner will give you an option to extend, right? So you are going to add that option, right? Limited to 25 years, right? Add the option limited to 25 years. So here they said 15, right? Then we have an option of what? +5, ne? But you only say +5, or you only +5 if you are certain that you are going to take the extra 5 years. So the information will tell us. You see, on commencement date, Crystal was uncertain on whether the extension option would be utilized or not. So if you're not certain, don't add it. If they say you're certain, then right. If they say you are certain, right? This guy don't set the joke.
It's fine. I get it. I
Right.
got it.
Right. If they say
Yeah.
you are certain, that you are going to exercise this, then you are going to add. That means I was going to go to what? 20 years, right? With a maximum of what?
25.
Yes.
Can the
This-
question be quiet, Jeff?
About?
About the certain part.
No.
So, Jeff, it can be more than 25 years. 25 is the
Yes.
max.
Is the max.
Okay.
Right. So if you're extending, so if they trick you and say yes, 15, then they say plus another 15 years. So you say, "Ngwing." There's a rule. SARS says maximum what?
25.
So don't go to 30 or maximum. Then you start again. I hope you heard what I said. On a limit. SARS does not want these leases to go for a very, very long time. So it limits them to. So yes, you can extend, but that extension should not go above. All right. So here they're not certain. So that means we won't use that. We will only use what? Angit.
Yes.
Yeah. So we're going to use 50. So write down these things and then you practice just in case you get something. So we're going to use 50. All right. So that means our lease premium we're going to claim over what?
Over 15 years.
Over 50. Right. And then in the current year, how many months are we going to claim for?
8.
8 over what? 12. Right. 8 over. All right. Then how much do we get? Is really equals.
13,303. Those 3 were confusing me. It's 13,303. Is that what
Okay.
everyone got?
No, I got 4,444.
That's what I got as well.
Oh no, I said 5 instead of 15. Sorry.
So it's 15
Jeff,
years.
can I ask, on the example that you sent, the one that recording, you've actually changed the years to months.
Yes, we'll get there.
So,
We get
okay.
there. Siago section 11. So
Okay, sir.
yes, UF is to address premiums, right? So if premiums, you claim it over the lease term. You don't claim it in the current year and finish. No, over the lease. So you'll be claiming like that. So that means in the next in 2025, you are claiming over 12 months, just like that. All right, because these are expenses. All right, right. Then let's go then now to section 11G. So section 11G, right, has its own information. It's coming from here, right? Mandatory improvements. Improvements valued at 1 million are to be effected on Yabantu building before the end of the lease term. So this guy is saying it's mandatory that if you are going to take this, you make an improvement. I want you to do this and do this and do this. So according to the contract is estimating that 1 million will be spent. And that's what the contract is, right? But there's a difference between contract and the actual. Okay. So if you're listening to that recording, I said you always check the what? Between the actual and the estimated amount, the lesser. Right.
Lesser of the two.
Yes. On commencement date of the lease, Crystal was uncertain on whether the extension option will be utilized or not. The mandatory improvements, on the other hand, were completed on 30 November 2023 at a total cost of what?
1.2 million,
1.2.
including that.
Including VAT. Right. And immediately what?
Brought into use.
Brought into use. So that means here we need to remove VAT because of this. That's why we need to remove. Right. Remove VAT, then you compare these figures. So that you can compare apples with apples. Because this amount excludes VAT. Because they said all amounts exclude VAT unless otherwise stated. So this is the only amount that is VAT. This one doesn't have VAT. So in order for us to compare these two, let's remove VAT and let's see which one is lesser. So I sent on the group, right? On the group, there are these notes, right? On the group, there are these notes, right? Leasehold improvement, section 11, small letter G. Deduct in full, right? Formula, lesser of the estimate amount or the actual amount multiplied by the current portion, right? I will explain what that means, over the remaining term period after. Then the lease term is the cost divided by what? The lease term, right? Multiplied by the current portion. So you see, everything is in brackets, you are deducting. So these are the notes, right? So far we've done this one. That's what was there so far. Then there's the improvements. Okay, and then on this side, right? So you take the lesser. So let's first remove VAT. Right, let's first remove VAT. So if you're removing VAT, right, there will be the what? 1.2, right, multiplied by 100 divided by 115 equals to what? Was it the 1043 something?
Yeah, 478.
Right, so you also calculate as well with what calculators? So you take the lesser between that or the 1 million. Which one is lesser?
1 million.
Yes, then 1 million. Right. Then that's where, then once you get this out of the way, right, the next problem is divided by the remaining useful life. Sorry, the remaining years after improvement. What we mean is SARS is clever, guys. All right. So SARS is saying, okay, yes, you are effecting improvements on someone's land. We agree, but we cannot give you an allowance on your cost, right? On the lesser of the two, right? Because remember, you are claiming this over a certain period. So the certain period that SARS wants you to claim over is when the improvements are completed. Because you know that there are companies, like the companies under Saudi, right? They start something they don't finish. Am I lying? Do you know Saudi? Etin Saudi.
The guy.
What do
Yes, do you know who Etin Saudi? Yeah, the tender guy.
Yeah, lo dealer
okay,
ngama-split queen.
the guy. Okay.
Yeah, lo dealer must take window. Odli imali. Odli tax money. Yeah, he starts something, doesn't finish. Ne? So just imagine, right? So now just imagine that SARS is giving allowance on a project that is in progress. SARS will always lose out. So SARS waits for you to effect improvements and complete them. Then he says, from the time that you complete, right, that is the period that we can what? Allow you to claim the what? Do you get the sense?
Only upon completion.
Yes, because if you don't complete, you take 10 years to complete, but every year you are claiming, SARS is losing.
Okay.
Because it might never end. Have you seen the swimming pools that were started, right? So
Right.
yeah, so it's 10 years later, nothing has been done. So that means someone will be making claims and SARS will be losing, because when you're claiming, you're reducing income tax. So SARS will be losing. So that's why they say, okay, effect the improvements, finish them. Okay. So that's where the changing into months comes from, Olet. Right. So you determine first how many years is the lease for? We said 15, right?
Yes,
Right.
sir.
And then you determine, when did you enter the lease?
In
21
August.
August, right? Then they will always give you completion. When did you complete the improvements?
November.
November.
30th November.
Exactly. But now remember, this 15 years is covering from 1 August until whenever, right? So SARS says that period that you were effecting improvements, take it out. So how many months did you spend effecting improvements on the property?
4.
1 August
Not
to 30
August,
November.
September, October, November, December. Yeah? 4 months.
Yes.
It's 4 months.
4
Bye,
months, yes.
Bonaban. Right. Remember.
18 minutes.
Yes, remember, you were effecting improvements right from 1 August. You were digging until 30
July. I mean November, sorry.
November. How many months is that?
4 months.
It's 4.
So it's
So-
August, September, October, November. Yes, so 4 months. So that's where the changing comes from. You then say, okay, if this lease term is 15 years, it's up to you. You can keep it, but I think it's easier when you convert. It's easier. Multiply it by 12 months, so that you convert into months. How much do you get? 180, right?
Yeah.
Mm-hmm.
Then you subtract the 4 months that you're busy grilling and grinding. And how much are you left with?
176.
176.
Yes. So these are the months that you claim the what? That cost.
But what about the months what about that 4 months? Does that mean, because now SARS is sure that I completed the work, right?
Yes.
Why would I not claim for the entire 180?
15.
Because now there's assurance that I completed the work. So what about those 4? Are we losing on them, or what's happening?
No, remember, what you are saying is that you are claiming on the cost that you incurred.
Yes.
Yes. But that cost will only start to be claimed when you complete.
That's why it says minus of 4 months.
Yes, 4 months. It's not about the time lapse. No, it's about the cost itself.
So
Remember,
does that mean I was just saying, so does that mean the costs that I incurred during that 4 months period, right? Can I then include them in that 160, 176?
yes, remember, that's the cost. Remember, it's these costs. But to effect the improvements, how much did you actually spend?
1.2.
Exactly. So claim agele 1.2. USA's
But
now
Jeff-
guaranteed, yes?
I feel like the question is, why do you exclude that 4 months whereby we're busy doing the improvement on the property?
Yes, we're excluding that 4 months because during that time, you will never know. You start something but never finish.
But in our case, we finished.
Yes, but remember, this is a question, but in reality, these things take time. These things take 5 years, 6 years.
I kind of get it, but my concern is that, like, I wish they could say, okay, fine, you finished the 4 months, then you can claim because you finished the work.
No, remember, the cost that you're incurring on the 4
Yes.
months is that 1.2.
That I can
Which-
only claim after.
Yes, after. That's what they're saying. After. All right. Their question is, remember, they're saying the improvements were valued how much?
1
1
million.
million.
Yeah, so for those
Total.
4 months, yes, you spend 1.
Mm-hmm.
So now that's in actual fact, the cost is now there because you've completed everything. Then you can now claim that cost over the term after completion.
Okay.
Okay, Chef, I get it. We exclude the number of months in which we're doing the improvement. But the
Yes.
question here, please scroll up a bit. Okay, wait. The 1st of August is what? What date is that one?
Commencement
It's
of the list.
of the lease.
Commencement.
Was signing there or when the improvement started?
They didn't tell us.
I-
Other questions would tell us that we started the improvements on this date.
Okay, my question is, what if we signed the lease agreement by 1st August 2023, but the improvement commenced on
It's then.
1st September and
We-
ended on the same date, which is 30 November 2020. So
We-
when we're excluding, okay,
We always start on commencement date. You always disregard when you started.
when we signed,
Yeah.
Okay.
Don't.
so we're
Yeah.
going to ignore 1st September.
Yeah, you're going to ignore when you first started to. You always
Okay.
start from commencement. So if a question gives you the improvement when you started the improvement date, ignore it.
Mm.
You
Okay.
ignore it. Maze benzen,
So-
just ignore. Always start on commencement date.
Okay,
So Jeff, just to add on that, because on that question, so between the completion and brought into use, for instance, this one, it said brought into use immediately, but
Mhm.
let's say it said that brought into use
Later on.
Yes, 31st December.
Mhm.
Which one then would we consider? The brought into use or the completion date?
For
I think it's completion.
completion, you end at completion.
Yeah, completion.
Oh, okay.
Yes.
All right.
Yeah,
Then
completion date.
brought into use, that's when you're now occupying or using the asset. Then SARS says start to claim that cost.
Okay. All right.
All right. So guys, you can only ask these questions if you have been attempting questions. That's when, because you are seeing maybe mistakes or confusions. All right. So don't sit on this information. We are trying. I'm giving you everything that I have that I know. So do the same and do justice to this knowledge so that you pass. No one fails tax. So let that be a challenge. Right. So we are done with that. So now let's calculate. We calculate. So on our calculation, we are saying that 4 months. So brought into use was also 30 November. So this guy is completed. Then immediately, Abantu Bangen, right, started using the building. This is your office. This is your office. So it has been brought into use. They're now operating. You understand? So now these 4 months will differ if the brought into use date was, let's say, in January. So that means SARS starts to give you this allowance, right, from the time you start to use. Right, are we together then?
Okay, let's repeat that part.
SARS starts to give you the allowance. So in other words, you calculate these months from the time you brought it in.
And you said-
Okay. So if it was brought into use by the 1st of December, we're going to have 3 months. We're going to
Yes.
exclude November.
Yes, we're
Okay.
going to say December, January, February, March. No, 30 November, 30 November, not December are the same. Let's say 1 January.
Okay.
Yeah.
Okay.
So it's 1 January, February, March, if the produce was 1 January. Because SARS will say, okay, yes, you have completed, thank you. Right. But now for you to start claiming that when you start using, when you start going in, people occupying the building, you've brought it into use. Then SARS says, okay, claim. This one,
Yeah. We are together, comrades.
we're together. Yeah. So
Yeah.
that's how it rolls. Then you calculate how much do we get there?
22,277, 727.
22,000.
727.
127.
Right, it's a claiming, right? That's why you put. So this was just me on top showing you how to do it. So you can do it underneath anywhere, right? All right, can just anywhere, right? And then this one only comes into play, guys, if you spent more than what was this one, this part. Only if the estimated amount, sorry, only what you actually spent went over the contract estimated amount. Then you claim the difference, right, as an allowance, 5% each year. Okay. So you ask, yes. So if you actually spent less than the contract, then you won't have this extra entry. Are we together?
So wait, Jeff. Did they not spend more here?
Yes, they spent more. They spent more. That's why it's there.
We add that, okay.
So we're going to say whatever we spent minus the estimate, the difference multiplied by 5%.
So if they had spent, let's say, 900,000.
We're not going to have that.
So how are we going to treat this?
Nothing. There's no treatment.
Oh,
It didn't
okay.
go overboard. Right. Is that clear?
Yep.
In anti-tax, no?
Can you explain it?
That's my job. I make sure.
Calculation are better than the theory. Man. I hate the theory of tax. Man. I must provide
Michael,
case laws,
let's-
provide section. Man.
Right. So this one, how much do you get? That man has that multiplied by that.
2,174.
We are claiming extra. So that's why companies like to have expenses, so they pay as little tax as possible. All right. But if you are caught, then that's what they right. So that's what you get. So we are done with that part. Then next we go into forex. That is the last asset. All right, we're almost done. Don't worry. Right. So that is the last thing based on that depreciation. So now with this one, companies buy stuff from outside, right? Especially when it comes to equipment, right? You find that they're buying trucks from Sweden, the Volvos, because they're produced there, the Macs from Germany, or the Toyotas from Japan, or nice machines from Germany. Those guys make strong machines. All right, whatever. I'm just saying. So there's tax involved. So the first thing that you should know is that now we are dealing with rates. Now we are dealing with what? with the spot rates. So there's what they call the transaction, all right? So whenever I give,
Elaborate. Sorry, I was just saying, can you elaborate on that spot?
yeah, I'll elaborate. Let's go and read. Right, let's go. It says on 1 November 2023, Crystal placed an order with the American supplier for an acquisition of a specialized delivery truck. So order date we ignore. That's entirely right.
Yes.
Yes, order date you ignore. You're ordering. We are actually not sure whether you're going to finalize. So don't worry about the order date. That's not ndabana. Right. Are we together on that one?
Yes, sir.
Right. So the order dates, we don't care about it. What we care about, transaction date, right? Transaction date is when the asset is free on board, or sometimes they say freight on board, because now we are saying there is no what? There's no going back. This thing is coming. So they are saying, all right, this was how much? $170,900. So we need to convert. And then they gave us the what? Freight on board debt. Sometimes they write it as what? As FOB. So it's the same thing. Free on board or freight on board, same thing, or FOB. 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 Right. The ship reached the South African harbor on the 22nd. We don't care about that. Crystal circled this one, yes, then we can consider that. Then they gave us the different spot rate. So remember, order date was 1 November. Ignore. 20 December. What happened? Crystal confirmed the order. Right. Freight on board date. Now we can talk. What was the rate? $1 was 18. Sorry, $1 was 18 rand 65 cents. So we convert that figure. That becomes your new cost. That's where everything starts from. Right. So this is section 24L. All right. Section 24L. That is what governs foreign acquisition of assets. Okay, so you start with the cost, convert. So $1 is 18 rand. What about $117,900? Multiply. Are we answered with the spot rates?
No.
What's the problem?
Can you please go back to the question? So can you see there where it says the shipment reached South Africa harbor on the 22nd
We
of...
don't care. We don't care about
We don't
reaching.
care.
No, we
Okay.
we don't care. As
So but
long
then now does that mean on the 12th of January, is that when the transaction went through?
yes, that's
Because I
when
get confused.
yeah, that's when that thing was either in the
Okay.
plane or on the ship. It's coming.
But has it...
Hmm?
So okay, it's on the ship or on the plane. I get that.
Yes.
Because how do I put this? Let's say on the 20th of this, on the 12th of January, it's on the plane, right? Or on the ship or
Yes.
whatever.
Yes.
Are we not considering when did the payment go through to our
No. For tax purposes, we are saying that is your asset. All papers, remember, there's a prior process. There is the whether this thing is visible, whether they can supply this. Is the transportation, how fragile is this thing? They conclude on that. They say, okay, it's fine. We can supply, okay. Then these guys ship that, they put it in there, they call you. Papers are ready, you confirm with your agent, blah, 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 it's ready. It's coming to you. That's it, they're done. Then you then need to pay for the insurance, what part, transportation, but they are done. Maybe they can be calling and checking and updating you, depends on your contract, right? But what we are concerned about is that your thing is coming. Payment is later. That's why here we don't talk about bank.
Okay.
We don't care about the bank. We are concerned about that you have an
It's
asset.
on the way.
Yes, that you now own.
Okay.
Second.
Sir, I have a question, sir. Like, which dates Minister recognize when we comply? Just like that's what on 1 November 2023.
Freight on board. Freight on board. You pay the transaction day. It's transaction day. When whatever you ordered is coming. Allow mama date ignore. Order date. Yeah, ship is on the way. No, sorry. It reached the harbor. We don't care when it reached the harbor. That's another story for another. We want the what? The freight on board. All right. Or carriage on board. Whatever. However they call it. That's the first date we look. So what was the rate on that day?
Okay.
Confused yini futhi?
Angizazi.
What's confusing?
No, bengibuza nje indaba ama-dates. Okay,
Ah.
now ngiya.
All right, sure. So you record it, Yabona futhi Wandi, you record it on this first column. You are indicating to SARS that this is the cost in rands of what I got. Then from there, SARS will tell you how to claim that cost, right? SARS will tell you how to claim on that, right? The specialized delivery truck was brought into use on 1 October. I always tell you guys, especially in accounting, that for SARS, we use brought into use date. And today I'm doing tax. We always use into brought into use date. That's when you start to claim the wear and tear, right? So from 1 February 2024, we claim the what? Wear and tear. So that means in the current tax assessment year, how many months are we claiming the wear and tear for?
2 months.
This-
February, March.
Yeah, yes, February, March. Thank you. Despite Krista's intending to use the delivery truck for a period of 10 years, that's for accounting. SARS allows a write-off period of 8 years. So remember, you're sticking to the what? To the house rules of SARS. 10 years is for accounting, right? SARS, we claim over 8 years. That's what they were testing you on. Do you understand or you get confused? So wear and tear is 2 months over 12 times. Is that one? Yes, that cost, right? Multiply. How much you get? Tax is long. So today I was give you a double
45,809.
session.
1,009. 9.
45,809.
Yebo.
So we flag a foot because you are claiming that cost. All right. And then there's something, guys, that they call a foreign exchange. Right. Do we agree that a rate fluctuates or a rate changes?
Yes.
Yes.
Yes, they
Yeah.
fluctuate.
Yeah, fluctuate. So again, this tends to confuse students, right? So remember, we are saying this person hasn't paid, Ntabi.
Mm-hmm.
This person said they will pay on the 20th of what?
April.
Which is the next year. Therefore, we are now saying, right, if you had, we are saying now, this is how you interpret. We are saying if you had paid this 117,000 on the 12th of January, right, right, you would have paid how much? 2 million, blah, 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 right?
Yeah.
Yes.
But now we've reached the year end. What's the year end?
31 March.
31 March.
31 March. So we're saying 31 March. If therefore, since you failed to pay on the FOP date, if you had paid at the end of the year, how much were you going to pay?
19.25 times 117,900.
Right. So in other words, would you have paid more or less?
More. If you pay at the end, it would be more.
Thank
But
you.
January less.
January less, né? Right. So that's where, yeah, that's where. So that's where the foreign exchange difference comes from.
Sorry, Jeff.
Yes.
Let's go back to the question.
Mm-hmm.
I think I saw the settlement dates there. Crystal
Yes.
gave you
Yes.
the purchase price on 20 April
Yes. Which is next year.
2024.
Yeah, it's next
I
assessment
mean, I
year.
was gonna be looking for that one.
No, you go to the end of the year. If you haven't paid by
Okay.
year end, we then compare the rates between FOB and year end.
Thank you, sir.
Then you are saying to yourself, okay, so if because I didn't pay at FOB date, if I had paid this amount by year end, at what rate would I have paid? So you would have paid at $1 is to what? 19 Rand, 25 cents. That means you would have had to change more rands to what? To equivalent $1. So it becomes expensive. So that's what you call foreign exchange. Foreign exchange loss.
Yes, sir.
Right. So once you get a question that is dealing with the foreign acquisition, always take note of the what?
So,
Mm-hmm.
so Jeff, let's say in this case, this client had paid somewhere in February. We're gonna
Yes.
use that as long as it's within the
Yeah.
year.
Yes. If the
Okay.
person had paid during the year, angithi there was January, then go February wabhadala. We're going to compare FOB date and payment date
Okay.
Oh,
and not go to the year end because we've paid. So why are we going to the year end when we've paid? Yes.
is it possible for the person to pay before the FOB date? Or there's never been such a situation before?
It's possible. In reality, it's possible, but yeah, normally companies will require their monies then.
Okay.
So that
So
means
but-
you, yeah, that means yeah, you just have to do your movement from that date to the FOB date, but there is no year end or something. But mostly for your exams, they don't do that because they want you guys to think a bit. But I
Okay.
think if you pay before, then there's no need for us to do exchanges because you are done.
Okay.
All right. Are we okay now?
Yeah.
Bambi.
Yes, sir.
All right. So we are going to come and say 19 rand 25 minus what? This one?
18.6.
I need to loss.
Yes.
So how much we
It's
get?
70,000.
70,740.
Yeah.
Oh, what you guys did.
It's 70,000, Jeff, 740.
70,700.
740.
Loss. So SARS will allow you to claim. If it was gain, SARS will text you, say include it. So whether it's a gain, a father, loss,
Okay.
right? Both ways you include, right? So we are done with the assets.